Hello investors and traders, so today we'll check the S&P 500 in technical analysis using Elliott Waves. Before we starting, I would like to encourage you to subscribe on my channel. A lot of videos about stock market, bond market, US stocks, S&P and Nasdaq analysis. And let's come back to my previous drawing. We can see that it's going as I already draw it in my scenario. Look, here we have the S&P index, and it was the first wave, the second, the third, the fourth, and the fifth. And now we are in a correction, and it's going very well. It's the fifth wave. So now, yeah, it's also this yellow line. You can see it's my focus for the future months, maybe till the end of this year. So we can see that now it's going very nice, as I already forecasted. And my target at my least target for this wave, yeah, let me check this again. Yeah, it will be at least 34.56. So this level, I'm expecting this wave to finish here. I remind you that it's expanding, leading the diagonal. It's that pattern here. It looks like this. Will be the correctional wave A. But then let's move to the weekly chart. I'm expecting another bounce to the wave B. It may be here because the B its bounce usually, yeah. Using the Fibonacci levels, it somewhere here between 62 to 38%. Its range bounce, but then there is a possibility to see the last one, the wave C. It will be the finishing of the correction. I'm not sure that it will be so tough, so deep, this wave C, but most probably there is a high probability to see these levels in the future, in the near future. So now the correction, in my mind, we can see another move down about 6-7% in the near term. Why? Actually, we have now the correction, of course, the high interest rate, high inflation, the recession, and this week the Federal Reserve of US continuing to hike, to tighten policy, and now the effective fund rate is above 3. So we can see that from the beginning of the year the interest rate was about 0. Now it's more than 3. So we can see that very aggressive hiking, where the interest rate are continuing to be raised. So that's why we have the S&P, the Nasdaq is down more than 20%. Let's check from its high levels. Yeah, so we already can see the S&P is down. Yeah, it's down about 22-23%. So if you now investor, so I'm not sure that you are not so happy. Also the Nasdaq, my previous focus, it was I said we have a head and shoulders pattern here, so most probably we can broke this neck level. So we can see this Nasdaq is much lower, so we can see it's broken, and the near target here is about 10,000, and maybe if everything will be go at a bad scenario, we can see less than 10,000. So it will be the levels of 2020. So because before the pandemic started here, not sure we can go so deep, because then the Amazon, the Google, Apple will be down another 15%. But this support level, I think that we may test in the near weeks, this one. And the DXY, the index dollar, we can see it continue to raise. No chance the Fed continue to hike it interest rates. So we can see now the DXY, the dollar index. Let's move to the weekly. The monthly chart is traded at the levels 2002. So we can see very strong move. If we will check from the beginning of June 21. So the move will be more than 20. So actually it's very correlated. the S&P and DXY. Let me we can see that S&P is down the 20 and the DXY is up 20%. So if you just look at the DXY, the dollar, the Fed policy, and you will you can receive a nice hint what to do with the stocks. And also one fierce, very negative sign, it's the US bond 2-year yield is about 4, so very high inflation in the US. The last figures, if I'm not mistaken, it more than 8%. So also we can see the inverted yield curve here. The 10-year is 360, no, 370, and the 2-year is more than 4. So the near-term risks are higher, are more elevated than for 10 years. So of course everybody expecting recession in the future. So it's also very, very bad sign. And also one thing I would like to show you, that it's monthly chart. So it was a decreasing channel here for the US bonds 10-year, and now most probably we are broken it and gone out from this channel. It's a bad sign, and we can see this yield 4%, 5%. Why not? The inflation we can see is not stoppable. Or another bad sign that we can see that the US, not the US, the Brent, the oil price is down, but the inflation is still not come down. And the oil price itself, we can see that here the support level, I told you already 2 weeks ago that we have very strong support level. Here it's 86, and now we already traded at this level. So the next one, it can be 56. I'm not sure if we can go down for lower in the near future, because there is still many risks in the world, the high inflation and etc., the China, and from here I'm personally expected the bounce from this level. And if I'm not mistaken, Goldman Sachs expecting till at the end of this year oil price about 120, 140. So we'll see, we'll check, but now I'm not sure we can broke this level. And the S&P, so I'm expecting a move down in the future weeks, then bounce wave B, and then another more deeper diving, even lower than level of 3000, but we'll see. It can be the fourth quarter actually, so we'll check. So if you like this video, don't forget to subscribe, press the like button, and see you on the next time. Bye.